Hello and welcome back to another episode of Majlis and Markets with your host Hassan Jivraj. Join us for insightful conversations with leaders in Islamic and global markets. As usual, remember to like, share and subscribe. You can also reach us at hassan@majlisandmarkets.com and follow us on LinkedIn. Today, we're talking about alternatives. Alternative assets like gold, cryptocurrency, and private credit have gained momentum in recent years. Driven by the COVID-19 pandemic, the Ukraine war, and uncertainty around global interest rates. These investments have become key as investors seek stability and higher returns. With President Trump 2.0 preparing to take office and new uncertainties on the horizon, what's next for these assets and global markets? Joining us to discuss this is Charles-Henri Monchou, CIO at Bank CIS. With his deep global experience, Charles will help us explore the opportunities and risks shaping the future. Charles Monchou, welcome to Majlis Markets. Great to have you here.
Thank you so much, Hassan. Thanks for your invite.
Charles, it's been a really long time since we caught up in person. I first met you in 2019. I was just talking to you offline before we started recording that I first met you in your Dubai office when you were at one of your old places of work. And I found the way you explained like really complicated financial concept, and you really like just broke it down. And you said, I remember the words you said to me, finance is actually not that complicated. But before we get into all of that, Charles, could you give our listeners your early life and your background story?
Yeah, so I've been in finance for 30 years now. I was born in Greece. I'm Swiss and French, grew up in Africa, and did spent some time in Dubai between 2016 and 2020. I'm now based in Geneva. I'm the Chief Investment Officer of Bank CIS, which is a Swiss private bank boutique with $25 billion in assets. So I mainly take care of high net worth clients. Investing across the different asset classes. So that's my job. So have a view on the markets and make sure that our clients have access to the best investment solutions and strategies.
Amazing, amazing. And Charles, you started off, I think you said, working in traditional banking, and then you went into the more like wealth asset management. What was that like going from like being a banker to a wealth manager?
But I think always been really on the investment side. So would it be, let's say, in terms of final clients, institutional clients, a private client? At the end, the name of the game is the same. Is that you need to navigate through markets, try to find the best solutions, and also what is very important is communication because obviously there are some good days and bad days when it comes to let's say the investment portfolio journey, and it's very important each time to explain to clients why things are going like this. It's I think markets are sometimes very difficult to read. You can have good performance during bad times, so let's say COVID, 2020, fantastic markets while the whole world was closed, and then you have some years where the economy is doing well and you have market going down. So sometimes you need to explain, why there is a disconnect, and also the reasons being behind some of the investment choices. So I would say, like in any job, you need to do the job, but you also need to explain why you are doing so.
Yeah, and just leading on to that, Charles, what do you do like on a day-to-day basis in your current gig?
So I'm very lucky because I view my job almost as a hobby. Because I can do many things. So first, obviously, I need to follow what's going on in markets on the macro sides, on the geopolitical side. So it's really about, let's say, really the research part of my job. Then the concrete side of my job is indeed managing portfolios, advising clients, finding new clients. There is a whole communication concept around it. So I'm lucky enough to, let's say, present, during some conferences, also speak to TV, write, we have a blog here at CIS Group. So writing some articles which are published on our blog or on financial newspapers. And last but not least, I also have a team to manage. So obviously, I think the human interaction is also very interesting. and I'm also sitting at the executive committee of the bank, so there is a strategic aspect. So my days are very, let's say, rich in terms of content, quality and quantity. And again, I see any like this time, we are speaking now about markets, and so I really see every slot of my day as pure, let's say, pleasure. And so I feel very lucky to have a professional life, which is again like more, let's say, more like a hobby than a true job.
Amazing. And Charles, just before we get on to alternatives, investments, and your thoughts on the markets more generally, the kind of people that you serve, these, I think you said they're high net worth individuals or they're special clients.
Yeah, so high net worth individuals these days, they fall into two categories. Some of them are, let's say, by their own, so then you can, talk to them as the end clients, and others will usually have sizable assets under management. From time to time, they have what is called a family officer, or a family office. So there's a professional, overseeing their overall assets, and then we have discussions directly with his family office instead of the end client. So it's either direct or indirect.
Amazing. And Charles, I've invited you today to talk about something that's quite interesting. I find it quite interesting as alternatives. You know, you can read lots about traditional public markets and traditional assets, but I came across one of your blogs a couple of weeks ago about alternatives. I think it was about gold and crypto, and I just thought it was like really interesting. And maybe you could tell our listeners what exactly are alternative investments?
So yeah, I think you touch base to a very broad definition of alternatives. So basically, alternatives in can be defined in different ways, but I think there is a very simple definition, which is the following: is anything which is not equities, bonds, or cash is alternatives. So here you will include into alternatives commodities, you will include private assets like private equity, private debt, real estate. You will include hedge funds, um, and then commodities like well, I mentioned already gold, but also cryptos. So that's the broader, let's say, definition of alternatives. What has been very popular um, before the great financial crisis in 2008 was hedge funds. That was the place to be. From the mid 90s to 2008, hedge funds were extremely popular. Then came Madoff, and I think since then it has been a bit more difficult. Um, what has been very trendy also within alternatives has been private assets. I think private equity is gathering a lot of interest, private debt as well. Real estate, especially in the Middle East, has always been, let's say, very popular because many Middle East clients, they like first what is tangible, and two, they like yields. So owning some nice property, and renting them, getting some rentals is obviously a very good way to not only get income but also protect your assets against inflation. And then now we see, it's obviously there has been a lot of ups and downs in cryptos due to the fact that we have seen some bull market and some collapse bull market. But I think that the interest in cryptos is coming back, especially now that we have the Bitcoin close to $100,000, and maybe interest into the altcoins will also come back. So look, it's at the end of the day, everything is uh, related to liquidity. We live in a world where liquidity is abundant because the main central banks are still helping the economy and the markets to get access to this liquidity. And in that case, liquidity lifts all boats. And this is why we have, real estate prices hitting new all-time highs in many places in the world. You have equity indices also trading at all-time highs. You have Bitcoin close to $100,000. All of this at the end is linked to the fact that liquidity is abundant. So the day liquidity needs to be pulled out, if for instance there is inflation coming back, then probably some of the most overcrowded and overvalued assets will start to get into troubles. But for the time being, it has been almost like the everything bull market.
And Charles, how do alternatives usually perform? Like, we've been in a bit of a higher interest rate environment until very recently. Obviously, we've had 15 years up until the pandemic and 2022 with the Russia-Ukraine conflict and other things, but we're coming in a bit of a transitionary period to a lower interest rate environment. How would you say alternatives have performed against, say, the more traditional vanilla assets?
Well, it really depends which alternatives and the phase of the cycle. So if I take an example like 2022, inflation, was coming back very strongly. Interest rates were rising. So for instance, also due to geopolitical situation, commodities did very well in the first half of 2022 because it was like one way to protect against inflation. Obviously, oil was doing very well, so lifting, the whole commodities complex. But at the same time, when you have interest rates rising because of inflation, then you have private equity, which needs to access leverage, got punished because if your leverage is costing, let's say, higher interest rates, then suddenly you have less leverage and you have less opportunities for private equity, let's say, new projects. And the same, with real estate, if you have, let's say, the yield coming up, at some point it puts the value of real estate at risk. So it very depends, and this is the beauty with alternative is that when you say alternative, it's very broad, but some of them are useful at some, let's say, stage of the cycle, while others, let's say, will become interesting later on. Cryptos, there is indeed a very high correlation with liquidity, which means that when interest rates are going up, they're not always the best choice. And if you remember the last, let's say, bear markets in crypto started indeed in 2022 when the interest rates started to rise because again liquidity was being pulled out, and that's created a deflating of the crypto bubble.
Yeah, with the crypto, if we just stick on that just for a second, I mean, there was a bit of a crash in 2022, obviously with the collapse of FTX and some other things that happened to the market at that time. But it seems like now that cryptocurrency, obviously with Donald Trump coming back into the White House and more progressive crypto policies and other things are happening as well in the market, do you think that crypto is like a really good, viable? But the one thing in tandem with that, Charles, is that you're seeing a lot of smart money come into the market. So you're seeing the retail traders that were there pumping the price as usual, but you're also seeing a lot of smart money with these Bitcoin or Ethereum linked ETFs.
Yeah, so I think first let's analyze what happens in 2024 very quickly. So first, back in May, no, so we had, let's say, the first, let's say, policy surprise was the approval of the ETF on Bitcoin, because that was not a given at the end of 2023. 1 year ago, it was a possibility, but it was not a given. So the fact that the big names like BlackRock or Fidelity launched a Bitcoin spot ETF was a game changer because not only it changes the access to cryptos, but also it means that basically there is an approval by the, let's say, main authorities in the US. And if you have BlackRock, entering the game, that means that the game is becoming serious. So I think that was the first high opener. We then have the halving, which went well, which is also one way to remind everyone that this is a like a deflationary assets, in a word of, let's say, overprinting of money. Having a deflating assets is, does have some, let's say, value, and I think many investors realize this. Then we got in May, the let's say this was the threshold with more than 1 billion transactions being achieved on the network. since launch, without a chairman, without a board of directors, without a CEO, without a CFO. The network has been working perfectly. So that was a reminder. And then, very interestingly, we had the presidential campaign in the US with cryptos suddenly taking center stage. And now that we have, for the first time ever, a crypto-friendly House of Representatives and Senate, because if you do the math, there are more than 300 lawmakers in the US who are pro-cryptos. It's another game changer. If in terms of regulation, we know that regulation is coming and that there will be, let's say, favorable political angle to it. You know, the last few years has been about, say, Larry Fink from BlackRock saying that Bitcoin was an index of money laundering, and it flipped to, let's say, okay, let's make money of it, and it's here for real. And then we had, a lot of doubts about the US authorizing cryptos and Bitcoin, and now we have a pro-crypto government. So that's a lot of changes, and you rightly said that there is some institutional money coming in. This is indeed what we see, is that it's a different rally. The altcoins have been somewhat underperforming the Bitcoin because money has been mainly flowing into Bitcoin. There is now, on top of that, very serious discussions by huge firms about investing part of the treasury into Bitcoin. This month we have Michael Saylor, the CEO of MicroStrategy, will present his vision on Bitcoin to the board of directors of Microsoft, because Microsoft is considering investing part of the treasury into Bitcoin. So can you imagine if Microsoft does that and other firms start to follow? It's huge demand. And then there is also this view from the US about creating potentially a Bitcoin reserve. There is already a bill with the let's say the text is ready. Doesn't mean that it will be approved, but it's definitely something which was unexpected a few months ago. So you can see that there is, let's say, more adoption, more regulation coming. Is going to be seen as, let's say, probably an asset class like the others. I think it will make a difference between, let's say, Bitcoin plus the altcoins. Within the altcoins, you have some projects, some protocols, blockchain, which look indeed real and serious, but you have many of them which look to be without any substance. You have these meme coins, you have NFTs. So look, it's the Wild West. In the Wild West, there are some winners, but a lot of losers. And I think we'll continue to see that. So there will be a lot of confusion between the coins, the blockchain protocols, which indeed have a future, and all of these scams. And I think from an investor point of view, that's very interesting, because if you have a little bit of, let's say, knowledge and information, you can make, let's say, you can try to filter all of this and allocate towards the potential winners instead of, let's say, losing your shirt on the losers. So that's quite interesting, I think, from an investment point of view.
Yeah, I was just going to ask you, Charles, is that you talked a bit about Bitcoin and some of the altcoins, but what do you have a view on like things like Ethereum or Solana? Do you think these cryptos have a place as well, or do you think it's mainly in the Bitcoin?
Okay, let me to me, to us, let's say Bitcoin is like a store of value, even though many people disagree because it's still volatile. But to us, it's a way to, let's say, protect against money debasement. So in other words, not a question about how much Bitcoin will appreciate against dollar. The question is more how much the dollar will depreciate against Bitcoin. So this is how you need to look at the store value. Point number one. For the rest, we see, the ones you mentioned, like Ethereum or Solana, are the equivalents of hyper liquid venture capital. So when you invest into venture capital, you know that 90 or 95% of your investments might probably, let's say, go to zero. But there is 5 to 10% which will survive and thrive. So this is the same way with all of these coins. Many of them will disappear. The big difference between these altcoins and cryptos, invested into these protocols, and again, that we view like hyperliquid VC or tech VC or hyperliquid, let's say, tech projects, is that unlike venture capital, where you have a valuation every 6 months or 1 year or 2 years, is that here you have instant valuation, instant trading. They are traded 24/7. So if you invest into Klarna, for instance, in 2022, you found out that Klarna was worth 70% less than last valuation, but it took maybe 1 year or 1 year and a half between one valuation compared to the other. Here is 24/7. So if there is any bad news, if there is any panic in the market, your VC investment into one of these blockchain, one of these protocols can lose 20, 50, or 90% of its value. But it's the same principle. You invest into very early stage tech projects. Again, many of them will disappear. But if you have, let's say, the knowledge, the skill sets to select those will thrive, will survive and thrive, then you can make 5 times, 10 times, 20 times.
Do you think that the price of Bitcoin and by extension other cryptocurrencies is linked to a lower interest rate environment? So as interest rates come down, people are pouring their money into things like Bitcoin. But there's talk that if Donald Trump comes into the White House, some of his policies will be seen as inflationary, and that may prompt the Fed to increase interest rates. Do you think the prices might even out after that, or do you think they have to correct when he comes into office?
But it's more about this money debasement. When you have, this is something we explain about Bitcoin, is that you need to go back to the history of money. Money, historically, until the 70s, was about creating a link between effort and the use of energy uh, and the production of money, the supply of money. So even if you think about the prehistoric time, there were some stones or the teeth of a mammoth being used as money. And to get access to this money, you need to do some efforts. Extracting the teeth of mammoths, there was effort needed. Extracting stones from the ground, there was effort needed. And then, you were creating money. Then, it went to gold, there was an effort needed. Then when we moved to banknotes, the banknotes initially was backed by gold. So there was always a link between effort and money creation. And then with the end of Bretton Woods, we move into the fiat money system, where here money is created out of thin air. Initially, it started slowly, but then more time goes, more governments, when they are in bad situation, what they do is they print new money to try to solve the issue. So the shortcoming of this is that when money is easy to create, bad things happen. These bad things are huge debt, huge budget deficit, inflation or hyperinflation, bubble with bubble bursting, and so on. And this is why, if you look at, and then the thing is that if you talk about the dollar, for instance, even though we have reached this year in the US $37 trillion in debt, the US is not going to default. But what is happening is what is called money debasement, which means that the dollar you had in the 70s, if you just kept this dollar with you without investing it into risk assets or into a store value, today you can only buy the equivalent of 5 cents of the time with this dollar because we have been going through what is called money debasement. So money debasement is not a bug of the system, it's a feature. Basically, the US government is inviting you to either spend now, because otherwise you will lose purchasing power, or invest into productive assets, risk assets like stocks or real estate, which is something positive for the economy, Or you have a third way, which might not be the favor way of the governments, but which is investing in store value. Gold is one of them, maybe all precious metals, but we also believe that Bitcoin is indeed a store of value. And if you look at how Bitcoin has been performing as the dollar, yes, it has been very volatile, but it has appreciated, or let's say the dollar has depreciated meaningfully against Bitcoin. So this is why to us it's one way to store value. You need to withstand volatility, but over the long run, you might be able to protect your purchasing power by allocating some of your assets to Bitcoin, probably a small amount because it's still very volatile, but still one amount.
Great. And Charles, as we go to another asset class, which is interesting to me, or researching about over the past couple of days, is gold.
Yep.
Gold's been rallying a lot over the past couple of years. It's just a really interesting asset. Obviously in Islamic history, gold has a very place, and in other religions as well, gold has a very important place. And it's physical most of the time. It's tangible. It's got a good store of value. People say it's a good hedge against inflation. What are your thoughts about gold?
Yeah, I will include gold into the store values. We own gold for some of our clients, most of our clients, I must say. It's the same principle is that, the more they will print, the more gold will appreciate against fiat currencies. I think what is also very interesting is that we live in very interesting geopolitical times. And what we are seeing with some countries is that they are shying away from US treasuries and accumulating gold in their reserves. This has been the case of China, for instance. This is the case of Russia. This might be a case of some Middle East countries. So they want to move away from US treasuries because probably they have some concerns about the current fiscal and debt situation in the US, but also they don't want their assets to be confiscated. I think it's all started with the Russia-Ukraine conflict, with the invasion of Ukraine by Russia. When the Russian assets got frozen, many emerging countries realized that although they've been accumulating some US treasuries, maybe one day they will not be able to use them. So what they do is that they accumulate gold, which is, let's say, neutral from an economic and political perspective. And I think this has been a trend which explain part of the strong performance of gold this year. Interesting to see, by the way, that the best performing assets this year are store value. So Bitcoin, gold, and silver instead
Yeah,
of Nasdaq.
yeah, it's interesting that I was reading an article before we started recording that I think the biggest gold plant has now been discovered in China. So I guess it also comes to this geopolitical thing, right, where different countries are competing against each other, and obviously
Yeah,
one who controls the most resources will probably do better.
yeah.
And then, where do you see gold prices going, Charles, in 2025? Do you think they'll continue to rally, or do you think it will correct?
Yeah, look, it's on the over the long run, I believe that gold can continue to appreciate because of these money debasement. On the more, let's say, short-term basis, it's everything can happen. If the dollar appreciates too much, it would be put some pressure on gold. If like last week, the market at some point believes that the new administration can start to reduce the budget deficit, there might be some profit taking. If there is more pressure by Mr. Trump for the BRICS countries to buy more dollar instead of alternative currencies, we might see gold under pressure. So a correction could happen, in gold in 2025. That's very possible. But where I'm more interested is what is going to be worse in the long run, and there are many reasons to stay bullish on gold, and one of them is money debasement.
Very true. And Charles, there's one thing that I wanted to ask you was about commodities. If we look at, for example, coffee futures to me has been very interesting. I don't know if you track it or not, but
You can see that going to the roof, yeah.
they've just been going through the roof. I mean, what's behind that? Like, I've been reading a few articles about it, saying a lot of it's to do with climate change in certain countries of coffee producers. Has that been playing a role, do you think, in that?
Yeah, it's mainly about supply and demand. So there is a growing demand, but the supply is being hit, and in part indeed to climate change. Uh, Look, it's if you look at supply demand mismatch, that's usually the best way to make some money. There are also some weather, like more short-term weather conditions, which can influence this price. There are also some political reasons behind. So it's a bit, the thing is that these commodities, they also, there is a lot of speculation also baked into the price advance. And then suddenly the speculators, if they see that things go the other way around for them, they might be very quick to sell. So usually we don't like to let's say trade the more tiny commodities. We prefer to see with broad, we can prefer to invest with broad instruments, allocating across the different commodities. Maybe there is one of them which is interesting, which is uranium. Why is that? Because the world needs indeed cleaner energy, and now nuclear is seen as a green energy. So many countries are thinking about, let's say, increasing their nuclear capacities. Um, and that means that there will be higher demand for uranium at the time when supply is quite constrained. Also, a lot of supply is coming from countries which are not necessarily, let's say, the friends of all the G7 countries. So there is this demand supply mismatch, which is quite interesting, with a long-term thesis, which is, let's say, the willingness of governments to move into nuclear, but also the firms. You probably saw Google investing into their own nuclear power to make sure that their data centers continue to be, let's say, well covered from an electricity point of view.
Yeah, what's interesting is it's also tied with cryptocurrency is that the amount of energy that's needed to create a lot of these things is quite astounding. Like, I mean, there's this famous statistic that the amount of Bitcoin you need to for electricity you need is like the same as Argentina. So yeah, do you think like electricity and energy will become like a bigger thing going in the next couple of years?
I think there are two answers to your question. The first one is true that if you look at the high level number for, let's say, energy need for Bitcoin mining, for instance, it's quite scary. But on the other hand, there have been a lot of progress being made, and now you have many Bitcoin miners using, let's say, clean sources of power. They are also optimizing the grid, which means that they are using, let's say, the most power when it's needed the least, sorry. And also due to their, let's say, urgency to find power, they are also helping some, let's say, remote places to be equipped with the right, let's say, electricity plants. So there is the good size of the good side of Bitcoin mining. So that's point number one. Point number two, you're right. Let's say I think one of the mega trends that we're currently seeing is the ever increasing needs of more electricity because the world is getting, let's say, moving from, let's say, rural to city center. Point number one. Two, huge demand from data centers and AI. And three, there is indeed, let's say, things like Bitcoin mining. So that's a big trend. And this is why, by the way, electricity utilities companies in the US have been doing quite well this year and might continue to do well next year.
Very true. Charles, as we bring the podcast to a close shortly, there was one thing that came to my mind, and this has been a big trend in the Middle East, and I know you still talk to Bloomberg Middle East and other Middle Eastern channels, is the idea of private markets and private credit in the Middle East. Obviously, private credit has been a big thing and has been there in the US for a very long time. But with regards to the Middle East and broader emerging markets, do you think private credit has a big opportunity?
Yeah, I was in Riyadh 3 weeks ago, invited by the CMA, and I think one of the main topic was indeed the debt, including private credit. Why is that? Because there is this is one of the Saudi is one of the fastest growing large economy in the world. They have fantastic project, a unique vision, and they are let's say building is like literally building a country. Becoming they have so many events coming, they have so many projects, and need to build. They need infrastructure. They need, let's say, real estate, new plans. Um, so they are really, let's say, in big need of let's say some financing. So the banks can finance, but the banks are, generally speaking, have become, a bit less reluctant to lend. Yes, there is a bond market, and I think that the bond market in the Middle East is going to expand a lot. And that starts with the fact that, let's say, sovereign bonds issuers in the Middle East are, most of them are better quality than, let's say, most of the G7 borrowers. Um, and and yes, these private companies, or some of them are quasi sovereigns. They obviously need some financing. And will it be, let's say, publicly listed bonds or private credits? There is a need, and the quality is there. So I think that the investors will be very interested to invest into these projects. So it's going to be a growing trend in the Middle East, definitely.
Yeah, what's interesting, I don't know if you saw the news, but like the likes of Mubadala and other entities are teaming up to come up with private credit funds. And for example, they did the one for India earlier this year, Mubadala and Goldman Sachs,
Yeah,
to fund like mid-market companies. I guess these companies can also access private credit, right? If the banks are not going to give them any kind of financing, so that provides
exactly,
alternative.
exactly.
Charles, as we bring the podcast to a close, what are your thoughts going into 2025? Obviously, we're in December, coming towards the end of the year now, and Trump 2.0 is coming in January 20 on January the 20th. Do you see like it as a more positive picture, or do you think it's going to be a little bit bumpy?
Well, generally speaking, we favor equities over bonds. Because it's well, it all start with the US, because that's two-thirds of the world, let's say, equity market cap. So I'm sorry, I need to start with the US. So you have a pro-growth administration cutting taxes, deregulating. Um, so that means that nominal growth will get a boost. In the meantime, some of their policies, like tariffs or closing the borders, are inflationary. So you have, let's say, real GDP growth going up, but also nominal GDP going up, because inflation might surprise on the upside. So all in all, that's more favorable to equities than to bonds, because bonds obviously don't like too much, let's say, higher debts, don't like too much high inflation. We still believe in this US exceptionalism, because we believe that Bidenomics have created competitive hedge for the US. It's the whole US is a net oil exporter now, the largest natural gas exporter in the world. The Inflation Reduction Act and the CHIPS Act have created, let's say, huge manufacturing capabilities in the US. They have AI, they are the king of AI. Just need to look at the top 10 stocks in the world, and they have higher productivity. They are mega capex stocks, have huge return on invested capital, huge free cash flows. They are also, we in the US, the equity market is negative net supply. There is more share buyback than IPOs and equity share issuance. So all of this is favorable to equities over bonds. Now, the thing is that US is a very overcrowded trade. Everyone, owns US stocks, and is also overvalued. So you need to diversify a bit your equity portfolio. There are sources of, let's say, alpha, which are cheaper. So let's say mid caps, also, stocks taking advantage of decrease of taxes, of deregulation. Think about M&As, targets, for instance. In international markets, okay, the situation is less rosy than the US, but there are some very cheap stocks in Europe, for instance. We still like India. So I think it's good to broaden a little bit, let's say, the diversification of equity portfolios. On the bond side, we like what we call the wealthy nations. So more like, for instance, some GCC issuers, some Asian issuers, but also more corporates than governments because corporates have lower leverage than governments, and they still trade with a spread. And then because you cannot count too much on treasuries to diversify portfolios, it's let's say probably good to consider other diversifiers. So we mentioned alternatives, for instance, will be gold, will be private assets, depending on liquidity of clients. So look, it's overall it looks to be a positive year for risk assets, but we believe that volatility is going to be much higher than this year. This year is an anomaly. Volatility has been abnormally low, especially for a year of election. So we think that there will be more bumps in the roads. It's going to be, let's say, less quiet, and that this will also provide with tactical opportunities for clients.
And what are your thoughts on China? Because like China's obviously been going through its own challenges over the past couple of years, and there seems to be the government there seems to be pumping a lot of stimulus into the economy, but it doesn't seem to be improving right now.
I think we start to see indeed, I think they waited for the first cut in the Fed rates to start to do something. And this indeed happened when the Fed cut rates by 50 bips. They came up with some kind of bazooka in terms of fiscal and monetary policy. Well, the only thing is that since the expectations of, let's say, more rate cuts in the US is kind of vanishing a little bit because the US is doing better than expected. That being said, we start to see some kind of stabilization of the let's say, economic growth in China. The PMIs have been higher than 50, so the expansion territory for a few months in a row. We also start to see, some basing in the equity markets. What is a bit worrying is to see China 30-year bond yields still moving lower, and the Chinese yuan trading at a new low, for some time this morning. So that means that, okay, there is a bit of speculation by some investors that the equity market will start to rebound. But the main markets, the main asset classes giving indication of where the economy is going are not too keen on that side. Again, I'm talking now about the 30-year bond yields in China and Chinese yuan. We like to see them also, making progress before saying that the situation is indeed improving. So quite cautious. We agree that some stocks like Alibaba, for instance, are very cheap and should be considered as, let's say, long-term holdings because at some point they will wake up. But for the broad markets, for the timing, we prefer to be a bit cautious.
Cautiously optimistic.
Yeah.
Charles, tell us any projects you may be working on, any upcoming projects you may be working on.
Yeah, so I'm going to tell you a story which is, I think shows that I think the world is changing and that we need to adapt, in finance is that, uh, obviously AI is a big trend. It increased a lot of, productivity at a time when wages are under pressure. I live in a country where everything is extremely expensive, so Switzerland, and including our currency, which keeps appreciating. So we need to find ways to be more productive, to keep our costs under control, but also upscaling in value, in upscaling in talent and in value proposal for clients. And I created this year one thing called Seas Research Labs, where I'm only which is made only by interns and young graduates coming from different horizons. They are extremely effective, extremely motivated. They use, let's say, tech tools in a great way. They help me a lot in terms of research, in terms of blog writing, for instance. And the beauty is that they are multitasking, so they help the whole team. And on top of that, they educate themselves between each other because the issue with interns or young graduates is that many seniors, they don't want to, let's say, invest part of their time to train them because they see this as a disruption. So here, let's say the oldest member of this team is in charge of, let's say, training the youngest one joining, and it has been super effective. So I initially it was like a pilot project, and now I'm expanding it because it has been extremely productive and helpful. And I think it's also great to give a chance, to young people, and also to show them that finance can be something funny, interesting. So I'm super happy with this. It's more like a human capital project, but it also leads to some great business successes.
Amazing. And Charles, obviously, you're very active on social media. What's the best way for people to read your research and thoughts?
Well, I publish like between 10 and 15 posts every day on LinkedIn, trying to with just grabbing some news or charts that I find, let's say, interesting. It's part of my own discipline to follow markets and try to find, let's say, new ideas. Also, find disruption because there are disruptions, happening everywhere. And the best way for me to understand what's going on and to follow is to be one, very regular in my posting, and two, try to explain things in simple ways. So I usually post on my personal LinkedIn, but also on the Seize Group blog. We repost everything in a section called Seize the Moment, like size the moment, and seize the moment. And this is the way, it's like it's a continuous feed. Many, by the way, members of Banksy's now are contributing to this. And if you want to follow me, that's be my guest. And if you want to reach me, you can also reach me through this vehicle, through this
I'll link,
platform.
I'll link in the show notes afterwards. But Charles, this has been a really fantastic conversation and a really insightful for me. And I wish you all the best for the rest of for the last part of this year and going into 2025.
Thank you. A happy new year and all the best to everyone.